The market is, to clearly identify it, it has been in a very significant downtrend. The further back we go, the more we can see how it's basically collapsed off that 150 level. Now we've moved into this 122 level, so again we're getting into a dangerous area to be selling, in my opinion. Not that it doesn't have room to extend to the downside, but I think we're going to correct higher first. Now again, that's just my opinion. So what we're going to do here now is we're going to take some of our indicators off the screen and we're going to do some cross correlation and put them up side by side. Now it's always good to do this too, just to essentially solidify the trend. And what I'm going to do is I'm going to do the presentation with the medium-term crossover only. This should be certainly interesting to look at, and I'm going to use that with the US dollar index. Okay, now I've got this set up so everybody can see this, and I'm just going to run through some of the currency pairs so we can see this and some of the major commodities. Now I've got the US dollar index here, and what I'm using is I've applied the medium-term crossover to everything, and I've also added the medium-term predicted differences from Vantage Point to point this out. So what we've got here on the medium term is we've got the US CAD is moving up positive. Now again, the medium term crossover, excuse me, on the US dollar index is to the downside. So what I want to do is put this up against some of the major commodities and see if we can pick up on the correlation, just to illustrate a point. Now with the US dollar index against the crude oil contracts, we can see that we're actually on a medium term, we're running a flat signal, but our medium term difference is above the zero line. The US dollar index, I'll only make a reference to it once, but it's below the zero line, and the medium term crossover has crossed to the downside. So we can see that there is an inverse correlation here. Now looking at our gold contracts, up against the US dollar, the picture is very similar. We've got a buy signal in the medium term, and the medium term difference is staying above that zero line. Very important that we look at that so we can assess what's actually happening here. Now one of my favorite correlations is the equity market. Now the equity market, in this particular case, we're using the medium term difference as an overbought or oversold signal. So as this moves towards the negative, then again what happens on that. Now again, I like the way that this is still setting up, and we've got a medium term crossover to the downside, but the medium term difference is showing us that it's somewhat oversold. So that's a bit of a red flag for me. So what I'm going to do here on that particular pair is that I can pull up the long term crossover and I can put up the long term difference and take the medium term difference off. Now I'm not going to apply it to all, I'm just going to apply it to the equity so everybody can see this. Now here's the difference between using a short-term indicator and a more medium to longer term indicator. The signal that the equities are crashing and the sky is falling, well wait a second, that may not necessarily be true. We can see that the long-term predicted difference from Vantage Point is actually sitting right on the zero line, and the predicted long-term crossover has not taken place. This is an excellent buying opportunity, in my opinion, on the equity markets. The longer the term the indicator, the less susceptible it is to market noise. That is the point that's being illustrated on this chart. The medium term picture told us one thing, that it's going to continue. The medium term actually told us two things, that it's medium term, it's moving down, but that it's oversold. And then our longer term indicator is saying, well wait a second, we don't have a clear sell signal in the longer term. So we've had an entire week of the equities basically pretty soft, a couple of decent days, and then it just sells off again. But the long-term crossover, with it not making that move and the predicted differences, well, this picture looks to me like the US dollar index is going to continue its descent lower, but the equities may have reached an actual turning point here. So this is an excellent way to use the program to look at markets from different, somewhat, I guess I could use the word time frames, but I always stress to my clients and my students to be very, very cautious of those short-term indicators, because they're good to let us know when a corrective move is coming, but trading off of it can be somewhat dangerous. So if we were getting into aggressive selling positions on the S&P 500, we could very easily be whipsawed out here based on the analysis that I've done. So just keep that in mind when we're going through some of the different commodities, etc. So looking at that, again, the natural gas contracts, very similar picture. We've got a crossover to the downside. We've got a flat signal forming here on the predicted medium-term difference, but it's running flat. So that tells me the long-term indicator is already saying that this thing is getting tired. So it's a very useful way to break it down this way, put it up directly against the US dollar so I can really do the proper analysis to get a good picture from all the different time zones and put very little credibility on the short-term stuff, because it's just there's so much going on in the market right now. It's hard to do that. So we look at things from a different perspective, and we certainly do come up with a different type of analysis. So what we can do, while I've got this US dollar index up here, what I can do is just, for the sake of looking through things, we can put it up against some of the currency pairs. So the US dollar index, we can see that the US Japanese yen is crossed over, it's moving lower. Medium term difference also getting into oversold territory, but it's interesting to see how the correlation is very strong. And you can see that through a number of, I'll illustrate that now through a number of different currency pairs. The US CAD, we can see this. Now the US CAD, another indication here, if we go into the US CAD currency pair and we take that medium term difference off and we apply the long term difference, is the picture still the same? Well, we can see that it's actually not. So this is another good indication. So in helping everybody understand how I do some of the analysis for the different things that I do, we can see that the long-term outlook on US CAD, along with that triple EMA crossover, are saying that there is no clean buy signal here. So again, we want to be very, very cautious of that. So the fact that that long-term predicted difference has hit that zero line and is not crossing over it, that is a definite warning sign for me. And then when we look at, again, we look at the US up against the US dollar index, the medium term has been to the upside, but the longer term is actually to the downside still. So if I was to take that, again, go to the US Canada pair, take the medium term crossover and apply the long term crossover, we'll be able to see here that the picture is not as clear as what it looks. So then again, and this is a very good way to point this out. The long-term difference has stalled at the zero line, and there is no long-term crossover on the Vantage Point software. This is the beauty of this program. It allows you to look at the short, the medium, and the long term. But it's pretty much a proven fact that the medium to longer term view in foreign exchange and even in a lot of equity and commodity contracts produce far better by not getting involved in this short-term stuff. So that is the Forex weekly outlook for the week of June the 28th, 2010. And again, my name is Greg Furman, market analyst here at TraderPlanet.